Hello everyone, and welcome to this presentation of a powerful strategy for capturing trending markets. Now, let's start off by sharing with you some charts here. In fact, we're going to look at this chart, and in hindsight, you can see there was a very powerful trend that went straight up to the upside. How could we have taken advantage of that? Well, in today's presentation, I'm going to share with you how this would have been the opportune place to actually buy before that rather strong trend appeared. And I'm going to share with you an entry technique where you could have actually found out to buy right here at this certain level. I'm going to share with you all the rules to enter at this certain spot with today's particular strategy. Welcome once again. My name is Primo. I am the president and founder of Specialist Trading. And for those of you who are unfamiliar with our website, we are first and foremost an educational company. As you'll see today, our sole motivation is to educate members and students so that you can ultimately make your own trading decisions. You see, it's our belief that the reason why the majority of all traders fail is because you're relying or trusting in someone or something else to tell you what to do. I mean, think about it. Look at your own trading. How many times do you rely on a certain number of indicators to tell you when to get in and out of a market? How many times do you go to a chat room or a trading room relying on what they're going to say to tell you what to buy or sell? Or how many times do you watch someone on TV and think some trading guru is going to tell you the right stock or right market to buy or sell in the perfect time frame? This is what most of us, myself included, started doing when we first began trading, but this is why most traders fail. So what we strive to do is to provide all of our students and members with sound fundamental education that has stood the test of time and teach and mentor you so that you can finally make your own trading decisions and put the power back in your hands. This is the same process that was able to turn my trading around nearly 40 years ago. I've been trading for a total of 39 years. I started my trading career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. Now, if you're not familiar with what a specialist did, if you ever Google the old pictures of the people on the trading floor, specialists were those traders behind those large wooden podiums that made markets in roughly about 50 stocks. So if you wanted to buy or sell a particular equity, you would go to the person who specialized in that market. So that's what I did. I made markets in roughly 50 stocks for about 9 years. I traded through the crash of 1987 and the bull market that followed. And so I really have tons of experience in seeing what works in terms of consistency and what doesn't. I've traded just about every method, every system, every strategy, so I know what I can actually apply to my own trading. And I've traded through straight up, straight down markets, sideways markets. So I've really seen, heard, and traded just about everything. And what I do is teach and mentor my students what I have seen in my own experience to find and that holds some type of consistency within their trading. So this is what we do at Specialist Trading. We are first and foremost an educational company. As you'll see today, I want to educate you and share with you this great entry technique to one of our best pullback methods. But before we begin, as always, we are required to show you our disclaimer. So please take a moment to view our disclaimer, as we see right here. I'm going to share with you a lot of performance results using this particular strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. So once again, we are required to show you this. And as you're taking a quick moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there at SPCLSTTRADG. You may want to copy that down or write it down. I post daily information anywhere from signals that our strategies have generated to actual little bits of wisdom I've accumulated along the way. And remember, these are for educational purposes only. But if you'd like some more education and some more information about what we do, my sister site, which is Pro Trader Strategies, has put together a Facebook page for us. So you can simply go to Facebook, log on with Pro Trader Strategies, and there's a lot more detailed information about myself, different educational webinars and different videos you can learn more about us, okay? Now, as I stated, we are first and foremost an educational company. The reason why most traders fail, in our opinion, is because you are relying on an outside source to tell you what to do. So what we want to do is teach you the same way and the same techniques and the same methods that were able to turn my trading around. Because my first year or two on the floor, I struggled just about the same way 99.9% of all traders fail. I was trying to pick tops and bottoms. I was having very minimal success, and every once in a while I think I'd be right back on track, and then I'd give everything back. And I'm sure a lot of you are going through that as well. It's very discouraging and very humbling because you really think that, what are you doing wrong? You're reading all the right books, going to the right webinars, seminars, going to all the right chat rooms, and nothing is working for you. So I was lucky enough to have a few mentors on the floor who were traders themselves, who saw how much I was struggling and were able to turn my trading around. And so this is what I do. I teach all of my students the same things and the same techniques that were able to turn my trading around. And as you can see, my goal is not to trade for you. It's not to force feed you signals on a nightly basis and tell you what time frame to trade. My goal is to teach you how to trade with a specialist edge so that you can ultimately trade for yourself and put the power back in your own hands, okay? Now, today I'm going to be talking about a great strategy. Strategy number one. It's probably one of our best pullback strategies in terms of consistency that we have at Specialist Trading. Today I'm going to share with you the initial entry rules. And you're going to get a lot of information and a lot of examples showing you how you can start using this right away. But before we begin today's class, remember, since this is going to be conducted like a classroom, I'm sure many of you will have questions, and I appreciate all your questions. I want you to ask as many questions as possible, but kindly wait till the very end of the presentation to ask questions. That way it'll flow a lot smoother. I will answer one question, the most popular, and is this being recorded? Yes, it is. If you have to leave early or if you're having technical difficulties, contact Pro Trader Strategies. You'll see there in the chat box, they have their email address as well as their phone number, and they will send you a link to this recording, okay? So kindly wait to the very end to ask any questions. All right, so let's begin. We're going to talk about strategy number one. Let me share with you some of the highlights of this strategy. It trades virtually anything, stocks, futures, forex markets. It's probably our most consistent pullback strategy. It works in virtually any market, any time frame, and in any direction. So you don't need to worry and say, well, Steve, I only trade currency pairs or I only trade tick charts. Absolutely makes no difference. Now, if you are using this on a daily basis, or in other words, you're day trading, well, you're going to get anywhere from 1 to 3 trades per day, depending on the volatility of the market. If you're a position trader, looking at, let's say, daily, weekly, monthly bars, perhaps, well, you get maybe 1 or 2 trades per week. But it all depends. So just know that the smaller the time frame, the more signals will be generated. The larger the time frame, the less signals. As with all of our strategies, everything we have at Specialist Trading, we always advise all of our students to paper trade first, because trust me, inevitably you will lose money trading, no matter if you had a trading technique that was 100% reliable, because if you don't learn it correctly, you will be entering at the wrong spot, you will be exiting at the wrong spot, you will be using the wrong place for money management or stop placement. So learn this by paper trading. That's the only way to really feel that you'll be able to really take advantage of this great technique. All right. Our edge is consistency. What does that mean? It means everything we teach and trade has a 2-step forward, but 1 step back. So that means there will be small losses from time to time. That's okay. Our edge is consistency, meaning that if you do have a series of small losses, usually you will make it back rather quickly, okay? Or have some nice bounce back in the strategy. So paper trade, but learn the strategy like the back of your hand before you apply actual funds, okay? All right, here are the indicators we're going to be applying for this. A 50-period simple moving average. Remember, this must be plotted on all charts regardless of what time frame you trade. And the 21-period Donchian channels. They're a very popular tool, very popular indicator, found just about on any charting software package. If you don't have them available, contact your tech support department of whatever charting platform you're using. They should be able to provide you with it. If not, there are a number of free websites on the internet that provide them. I know one of them, you may want to copy this down, is freestockcharts.com. We're not affiliated with them in any way, but I know they provide Donchian channels, so you can practice on them as well, okay? All right, these are the rules. I'm going to go over them rather quickly because I'm of the belief that you really understand things more with a visual means as opposed to just reading them. So I'm going to read these over really quickly, and they may seem wordy, but after I start showing you the slides of actual charts, you'll see how simple it really is, all right? All right, these are the buy rules. If we're going to be buying, price, and what I mean by price is the closing of the bars, all right? The majority of the bars, we'd like to be above the 50, but worst case scenario, you want to see that the price is closing above the 50-period simple moving average, okay? Now, the Donchian channels have 3 distinct different channels, top, medium, and bottom. We want to see all 3 of them headed in the same upward direction. Now, what we're going to do is we're going to look to buy when we find that price starts to decline. This is the pullback, all right? So as price starts to sell off and the price bar's range is either touching or entirely below the middle Donchian channel. And once again, you'll see exactly what this looks like. If we have a bar like this, we will call this the setup bar. All right, and all we want to do is we want to buy one tick above the high of the setup bar. That's it. But remember, always paper trade before applying real funds. Let's go over some scenarios of this to show you how simple this technique really is. All right, looking at this generic chart, and I specifically left it generic just to show you that it wouldn't matter if this were a tick chart or a monthly chart. It will work on any time frame or market. Now, looking at this in hindsight, we would say that, well, where are we in relation to the 50? Well, we're above the 50. So what is this telling us? It's telling us that we are only going to be looking to buy. We do not sell anything if it is above the 50. Over time, you will see that there is a high level of consistency. This is one of the things I was taught nearly 40 years ago, and one of the things that has helped sustain me for that 40 years. So if price is above the 50, you will never short, regardless of what strategy you're trading. If it could be one of yours, one of mine, never short above the 50. Only be a buyer, all right? So we're obviously above the 50, so we're going to be a buyer. But where would have been the most opportune place to purchase? Well, it would have been right here, right, on this pullback. How could we have taken advantage of that? How could we have purchased right at these levels? The first thing you want to do, since you know you're a buyer, is to add the 21 period Donchian channels, as we see right here. All right. Now, this is the way the Donchian channels look. They're not smooth like Bollinger Bands. They have more of this edged or jagged way of rising. They're kind of a stair-step approach. And even though they're all headed in the same stair-step direction, as you see, they're not all in sync, because sometimes you will see price rising on the bottom one and you'll see the top one going sideways. That's okay. They're still all coming from a lower level. So as long as their last, even if it's sideways bar is coming from a lower level, they're all headed upwards. What you don't want to see is two of them heading upwards and then this one starting to go lower. Okay? So they're all in sync. So what we want to see is that price starts to rise. As we see here, price is rising slowly, and as it rises, it will start to touch that top line, okay? That's our clue that most likely price is going to start declining. But we don't do anything yet. We wait and we want that decline because that's where we're going to enter on that pullback. So as we see here that price rises and touches this top line, now we start to see a decline. This is what we're looking for. But this is where most people have trouble trading pullbacks. They don't know when to enter. This is where the Donchian channels help us. Once we see price start to decline, the first bar that touches this middle line, okay, doesn't have to close below it, just has to touch, as we see right here. This is our very first setup bar. But we're not going to simply buy at the market. We're going to wait for price to trade above where this green horizontal line is. And it has to trade above on the next bar, all right? So this is our setup bar circled in blue. Did the next bar trade above it? Absolutely not. But we're still above the 50. The Donchians are still rising. So now this is our setup bar, okay? All right, so now instead of buying up here, now we can buy lower. We'll buy here. But we have to trade there on the very next bar. Did we do it? No. So now this is our setup bar. Do you see how we're going to just continue to track as long as the conditions are still in place? We're being above the 50, and as long as these Donchians are still in an upward rising mode, we will just continue to track lower and lower until ultimately we finally do trade above. We do not have to close above there. We only need to trade above there, and that's where our entry is, and that's where the pullback ends, and we resume our price upwards. Simple, right? That's it. My mentors taught me that trading is extremely simple. If we're doing it correctly, it's very simple. The only trouble is we've been taught that the more complicated you make your trading plan, the more valid it will be. And it's taken me nearly 40 years to learn that it's the exact opposite. Really, in reality, the simpler your plan is, the more validity it will have in terms of consistency. So keep your trading as simple as possible. This strategy only really has about 5 or 6 rules, and that's it. I've just shared with you about half of them. All right, let's look at the sell rules real quickly. They're just simply the same as going long, but we're going to reverse everything. Now price must be below 50 period moving average. Now we want to see all the Donchian channels headed in the same downward direction. And we're going to look to sell when we see that price starts to rally. It starts to rise. This is the pullback to the upside. Now, price will start to rise, and now it's either going to touch or be entirely above that middle Donchian channel. This is going to be our setup bar. But remember, just because we adequately identify a setup bar doesn't mean we're going to be selling yet. We can only sell if the next bar trades one tick below a valid setup bar. That's when we go short. All right. Remember, as always, paper trade first so that you really understand this like the back of your hand before applying real funds. Most of our beginning students who take this course, their eyes light up and they can't believe how simple it is. And like I said, inevitably they will lose money because they didn't study the rules in their entirety and they're entering at the wrong place. Maybe all three Donchian channels are not headed in the same direction. They think they are, but they're really not looking at them correctly. So really study this so that you fully understand. All right, so let's look at this blank chart here. Once again, it does not matter what it is. It does not matter what time frame. It does not matter at all. But the first thing we want to do is we want to decide, what are we going to do, buy or sell here? Well, obviously, it would have been nice to sell, but how would we have known that we should have been selling this? It's easy. You apply the 50-period moving average. Do you see how powerful but how simple this tool is? The entire time we've been below the 50, so we know we're never going to buy anything below the 50. Once again, it doesn't matter if this is a 50-tick chart or if it's a monthly bar chart. Absolutely makes no difference. The same concept applies all time frames, all markets. So we're below the 50. Okay, so we know now in advance, and we knew as well way back here that we were only going to be sellers. Even though we saw price start to rally, we're going to use that to go short. So this would have been the perfect place to sell short if we know we're below the 50. Here's the most opportune place to go short. But how could we have done that? In hindsight, how could we have known to go short at these levels? Well, you add the 50-period, you add the Donchian channels. And as we can see here, the Donchian channels are the same, but now they're all headed in that same downward direction. They're not in sync because remember, sometimes you'll see a bar like this going sideways and you'll see the upper bars headed lower. So they're not in sync. Just know that each bar should be coming from a higher level. Okay, so it's lower than the previous level. That's okay. All that means is that they are headed in the same downward stair-step direction. So now that we're looking to go short because we're below the 50, now we want to do the opposite. We want to wait for price to touch that bottom Donchian channel and then start to rise. Okay, it's going lower. It's touched the bottom Donchian channel. Now it starts to rally. The very first time it touches the middle line, that's our setup bar right there. And we're going to sell if we trade below it. But we have to do that on the next bar. Did we trade down there on the next bar? You notice I didn't say did we close below there. I just said did we trade there, intra-bar. No, we didn't. That's okay. Now this is our setup bar because all the rules are still in place. We're below the 50. The Donchians are still headed lower. So now this is our valid setup bar. Did we trade below there on the next bar? Yes, we did. We traded right down to there. So we entered short right at these levels, and look what happened. The pullback concluded, and the trend resumed to the downside. Extremely simple. There's no reason to be in a chat room to figure out what everybody's doing. There's no reason to listen to some guy on TV or even on a webinar telling you what to buy or sell. There's no reason to go to have a signal service to tell you what the perfect market is or what it's going to be doing. All you need to do is what my mentors taught me. Use a few tools that are able to tell you what the market wants to do and just listen to the market. There's no higher time frame you have to look at to find out what to do on the lower time frame. Remember, don't overcomplicate your trading. Just look at the chart in front of you, and that's how you become consistent, not by listening and relying on outside sources to tell you what to do. All right, so let's start out with looking at some more strategy one examples to give you a better idea of what to look for. We'll start out with stocks for all you stock traders. I know there's a lot of stock traders out there. And remember, once again, I'm going to show you a lot of examples. If you happen to have any questions, kindly wait till the very end of the class, and then we will answer any questions you may have, okay? All right, SHW. As we look at this chart in hindsight, well, obviously it's been going up. Sure, we would have wanted to have bought, but how did we know we were going to be going up well back here? That's the opportune place to buy, right? Well, it was simple. you apply the 50-period moving average. You see once again how simple it is to be on the right side once you apply this? And we see here price started crossing above at these levels. All right. So how could we have taken advantage to buy somewhere down here? Apply the Donchians. They're all rising. And at this point, we had consistency in price closing above the 50. So we touch the top and we simply wait for price to come down and touch the median line, which it did. This was the first bar. So there's our entry price, or I should say our entry date for the setup. And you would have entered the next day on the 25th. And the stock basically went from 260 to 290, 30 points in the next month. Now, obviously, it's an expensive stock. We're not saying everyone's going to purchase a $300 stock, but you could have easily purchased directional calls or some type of strategy that used and applied options. Okay, that's simple. How about SWKS? Now, looking at this, we're saying to ourselves in February, coming into March, well, everything I've been taught, Steve, it looks like we kind of made a bottom here. And here we made a short-term top. And now we've broken above that short-term top. So this is telling me higher highs, okay? And as we can see, lower lows, or should say higher lows. So we're in an uptrend, short-term uptrend, right? So I should be buying right here, right? This is the way we're usually taught. And this is the way why most traders do not have consistency and fail. Use things that work, that are extremely simple and that don't leave a lot of room for interpretation, like adding the 50-period moving average. Where is price in relation to the 50? Price is below. So there's no uptrend we're interested in. We're only looking to sell. We're not going to be a buyer. Okay, this is how you become a consistent trader, by listening to the market. All right, so since the market is telling us that the overall trend is down, we want to look to sell. All right, and we'd like to sell somewhere around here. This is the most opportune place. Well, we add the 21-period Donchian channels. They're all headed in the same downward direction. And as we see, price is hugging that lower channel, and as it starts to rise, we look for it to touch the middle one, and it touches right here. So this is where we want to go short if it traded below the next day, but it never did. But that's okay. The next day now traded there. So this is our setup on the 1st of February. But we can only go short if we trade below it on the next day, which we did, and the stock went roughly from 67 down to 55 in the next week or so. We didn't listen to any news. We don't look at earnings. We don't even, care about what's going on in the world. The only thing you need to look at is the stock in front of you. How about PG? All right, well, it looks like this is rising in an uptrend, and obviously this was above the 50-period moving average. So, okay, so now we're going to be buyers. These are the most opportune places to buy on these little sell-offs here. So how could we have taken advantage of that? Well, we add the 21-period Donchians. Unfortunately, we wouldn't purchase anything here because this never went down low enough to meet our rule here of touching the middle line. But we did here. We ultimately touched here. We didn't trade above, but we touched here again. And so on this day, on the 1st of March, that was our setup, and you could have gone long the next day, roughly about 81.5, and the stock went up 2 or 3 points in the next week. All right. Now, price touched the top line and starts to decline again. So now we have another setup. Here's a setup bar, touches the middle line, but it never trades above. So here's another one. It never trades above. Here's another one. And that one we did trade above. So we would have gotten a valid buy signal on the 15th, entry on the 16th, and another 2 or 3 points to the upside. How about news? I know a lot of people are always saying, well, Steve, this is all well and good, but if some news event comes out, it's going to cancel out all of this stuff. None of this stuff's going to work if some bad news comes out. Well, that's true. But I have found that because we're not listening to outside sources, we're listening to the market, that the market oftentimes tells you what you need to know in advance of the news. And so if you're listening to it correctly and using the correct tools, you're on the right side of news even before the announcement is made. So that's what, the consistency that we have at Specialist Trading. We are listening to the market, and many times, not guaranteed, but many times we are on the right side of an announcement weeks before it even comes out. Here's an example. This was at the beginning of the year. eBay's disappointing forecast fuels a stock decline. Okay, the weaker than expected revenue and profit for the current quarter and full year as to the e-commerce company struggles against a strong dollar while trying to revamp its core marketplace business. Okay, there was a terrible forecast, so the retailer fell more than 12% in extended trading. So looking at the chart, Someone would say, Steve, how would you have had any idea? The stock's basically going sideways. There's no way to have known that in advance, okay? We're basically in a range going lower and then going back up. How would you have known that in advance, okay? Well, where is price in relation to the 50-period moving average? Right away, we know that we wouldn't even been long this stock, so there's no way we would have been buying because price is below. So right off the bat, we're on the right side. But how could we have taken advantage and gotten into this prior to the news? Well, we apply the Dodging channels. Are they all headed in the same downward direction? Yes. All right. So the rule is we look for price to hug the lower one, and now we want to see price start to bounce and touch the middle line, which it did right here. Okay. Touch the middle line, but we didn't sell until ultimately this day right here on the 26th of January is the day we had a valid sell setup. Why? Even though these were valid as well, this was the one prior to entry because you would have entered the next day. All right. And once you got short, you would have placed your stop at a higher level, and look what happened. News came out the day after you entered. So you'll see this time and time again. It's not guaranteed. Sure, every once in a while we will be caught on the wrong side. There's nothing you can do about that. You know, most everyone is caught on the wrong side every once in a while. But the majority of times I have found through my own experience, you're on the right side because of these very powerful but simple techniques we teach all of our students and members. Now we can also apply this to intraday trading. I know a lot of you say, well, Steve, I don't trade daily bars, I trade intraday stocks. Okay, here's a monster on a 15-minute time frame. Meets all the same rules and all the buy setups you could still apply on a 15-minute time frame, okay? Now remember that chart I showed you at the very beginning? Well, that was a monthly chart of Apple coming into the middle of 2015, the middle of last year, about a year ago. Now obviously it had a tremendous run up to the upside. How could you have taken advantage of that in your IRA account or long-term portfolio, okay? To take advantage of the stock going from basically doubling in price from 60 to 130 really. This is where you would want to buy. Well, as we look here in hindsight, that would have been the most opportune place to purchase Apple. But if we add the tools I've shared with you today, we're above the 50. The Dodging channels are all headed higher. And as you see here, price touched the top. The same things apply. We create all these setup bars, and we just would have tracked it down until ultimately we traded above the previous setup bar right here, roughly about 62, and the stock went straight up after that. So nothing changes simply because we're looking at a 15-minute bar or a monthly bar. The same rules will apply. In addition, nothing will change if we look at ETFs, all right? Now this was in February, once again, and the spiders. The beauty of this technique is that you can also apply it to ETFs or to market indices to use as some type of trend identification tool or market identification tool, okay? Now, we know that the spiders represent the ETF that represent the S&P 500 index. So rather than simply go short the spiders, maybe you didn't have an account size big enough to short the spiders, you could have said, well, you know what? If the spiders are supposed to head lower, then that means the market's going to go lower. So maybe this gives me the opportunity to actually sell one of those stocks I was thinking about, or maybe to buy options, puts in the ETF. As we see here, this met all the rules to go short on the 2nd and 3rd of February. As we can see here, for the next week or two, the market went lower, and that represented an 800-point drop in the Dow in just about a week or two. We can also apply this to commodities. Here's the weekly chart of the 10-year note. This is going back to last year, last November, but as we can see, we had a buy setup. We were above the 50, even though we had a couple of days where we closed below it, or one day. That's okay, I should say 1 week. Our entry was above the 50, so it's still a valid setup, and the same rules apply, and you could have seen here where the 10-year notes were going up. No reason to track interest rates, no reason to track the economy. It's all in the price. And you can apply this to ETFs for gold. Here's the future of gold, as we see here. This is the gold daily chart. And coming into the beginning of the year, gold price crossed above the 50-period moving average. So this means we're only going to be a buyer of gold. We knew this as far back as the beginning of January. Now, we had all three of the Dodging channels headed higher. So this met our valid setup bar rules. So you would have entered on the 15th from a setup on the 14th, and We all know what happened to gold in the first 3 months of the year. Someone could have said, well, yeah, but don't you need to look at what's going on in the world or read all the reports about the economy to invest in gold? Why? If everything you need to know is in front of you, why would you have to make your trading more complicated? Trust me, I worked on the floor. I was in charge of making markets and trading 50, sometimes over 50 stocks. I did that for nearly 10 years. If anyone needed to, if you're looking at conventional wisdom, if anyone needed to know the financial stability and the earnings and what was going on with the stock, it would have been me, right? I stopped looking at earnings, over 40 years or over 39 years ago. So I haven't looked at earnings and news in that long, and I'm still trading. So there's solid proof that you do not need that in order to be a consistent trader. You can apply this to crude oil. Here's a weekly chart of crude oil. Crude oil has been going lower. Why? Well, it's because it's below the 50-period moving average. We all know that for going back the past year or two. And the entire time it rallied each time, well, it generated a valid setup bar to go short, and you could have gone short crude oil on a weekly basis. Here's another one, gone short again in October. And guess what we're doing right here coming into April? Creating another setup on a weekly basis. Is this telling you maybe that we'll be going short crude oil again? Well, only if we follow the rules by trading below the previous bar's low on a weekly basis. All right, so those are commodities, those are futures, or I should say those are ETFs, and those are also stocks. Let's go over to the E-mini S&P futures. Now, I know a lot of people don't trade weekly futures. I know I personally don't, but I'm sharing with you this chart just to show you how this technique, how this strategy can work in any market or time frame. Here is a weekly chart of the E-mini futures going back to 2012 all the way back into the beginning of 2015. And look how all these buy signals are generated using the same technique, the same rules I shared with you today. But let's go to something that's a little bit more practical. Here's an hourly chart of the E-mini just about a month or so ago. The same rules apply. We're above the 50-period moving average. All the Donchian channels are headed higher, and we had a buy signal generated right here when price came back. The first time it touched the middle line, that's our buy setup, and look what happened after that. And I want to share with this chart. This is a much older chart, but I want to share with you because I know a lot of traders are always saying, well, Steve, this is all well and good, but I just can't let go of the fact that, as smaller traders, we are really, basically leaves at the mercy of the wind. I mean, there's no really way we can compete with the big boys, the institutions. I'm just a small personal trader. There's no way I can compete with these hedge funds or with these high-frequency traders. There's absolutely no way. They get in the way, and what they want to do, they're going to do, and I'm going to be always, left on the wrong side of the market. Okay. This is the way I used to think, so trust me, I sympathize with you, but I don't really agree with that anymore, because once my mentors were able to teach me these simple things, then I was able to turn things around. First of all, here's a chart where we're looking at a 5-minute chart of the E-mini. We ask ourselves, using this technique, where is price in relation to the 50-period moving average? Well, for the entire time here, price has been below. So, knowing that as a small intraday trader of the E-mini futures, are you going to be a buyer now? Absolutely not. If price is below, what are you going to be doing? You're only looking for sell setups. It does not mean that you're going to sell at the market. You need structure. All right. So what's the structure I'm sharing with you today? The structure is in the form of the Donchian channels. Now you want to wait to see that all of them are headed lower. So at this point, this one is not headed lower, and right here, that's the first downward move. Now the middle and bottom one have already been headed lower. So at this point, we're all in sync. Now we just simply wait for price to rally. And the first time it touches the median line, that's our setup bar. But we need for it to trade below, and it does right on this next 5-minute bar. So you could have gotten short right here, all right? And look what happened to price, okay? By the way, this was the flash crash about 6 years ago. I'm sure you all heard about that, where the market was down thousands of points intraday. This day was probably one of the best trading days a lot of our students had, because they knew all of these simple techniques now. Okay, but it was the traders who were using conventional wisdom, the same thing that I was taught that really didn't make any sense, that lost a lot of money. And once they start losing money, what do? They start playing the blame games. They start saying, well, there's no way a little guy like me can compete with the big guys, or these high-frequency trade setups and all these programs. That is a victim attitude which we don't believe in at specialist trading. That's why we always tell our students, listen, there's no reason why you have to ask people what they think of the market. There's no reason why you have to ask anyone what you think of interest rates or what you think of earnings, because you already know everything. Everything you need to know is in front of you. We give you all the proper tools and setups. All you have to do is decide which and how you want to trade. So there's no reason to be a victim when you're trading with our tools and techniques. Now, lastly, let's look at the Forex markets, because we know we have some currency pair traders out here. Here's a weekly chart of the Canadian dollar, all right, coming into February, March of this year. Same conditions apply on a weekly chart of the currency pair. We're above the 50-period moving average, and each and every time price dropped down and touched that middle Donchian channel, that created a valid setup bar, and we only purchased once we traded above one. And it gave you two setups here, one in May of 2015, a year ago, and another one in June of 2015. You think you could have done well holding on the Canadian dollar up until March here? How about a daily bar chart of the British pound? Okay, same thing applies. Daily bars were below the 50-period moving average, and every time we bounced, we touched that median line that created a setup bar to go short. Okay. Now, there were different ones. As you can see here, here were some ones that would have come, and depending on what your stop loss was, you would have either been in or stopped out. Same thing here, and the same thing along the way, possibly here. No, this wasn't one because you see the bar went up, the Donchian channel went up, so nothing was created there. But as you can see, even though you will have small losses from time to time, most of the time, not guaranteed, you're met with another consistent winning trade. So let's recap before we go into the question and answer portion. Remember, this technique, this strategy trades everything: stocks, futures, Forex. I even showed you commodities. I showed you, some ETFs as well. It's a very consistent pullback strategy, as you just seen, and it works in any market, any time frame, and in any direction. So it does not matter if you say, well, Steve, I only trade tick charts. That's okay. It works great. Or you say, Steve, I only trade my long-term portfolio. Well, I've shown you monthly charts. It works great there as well. Okay. If you're day trading, intraday trading, you get about 1 to 3 trades per day, depending on the market volatility. If you're position trading, swing trading, maybe 1 or 2 trades per week. But once again, I can't stress this enough. Please learn this technique I just shared with you like the back of your hand, because most students fail not because it's a faulty strategy, but because they're implementing it incorrectly. They're entering at the wrong spot. They're saying, oh yeah, you're right. I was supposed to enter once price traded above the valid setup bar. Or they are not looking to see that all Donchian channels are in sync, okay? So please, once you really understand how this works, paper trade it until you finally have no further questions. Then you can apply real funds, but keep the funds small in the beginning, okay? Trade very small, odd lots or mini lots, okay? Our edge here is consistency. What does consistency mean? It means 2 steps forward, 1 step back. That 1 step back means that you will have losses from time to time, as I just showed you. That's okay. The beauty of this is that many times we've seen that it will make back those losses quickly. So continue to paper trade and see how this works for you. In closing, I want to ask you a question and ask yourself honestly here. Do you think this strategy could have helped your trading this past year? Now, I realize not every strategy is for everyone, and that's okay. In fact, that's what we encourage. We do not want everyone to trade the same. As I stated in the beginning of this presentation, the reason why most traders fail is because you're taking your cue or your indications from an outside source and trusting how they do or how it does and then just mimicking it. We don't want you to do that. If you don't feel comfortable with a particular strategy, even if it's one of ours, don't trade it, because it won't lead to any type of consistency. But what if you just like the powerful techniques we share with you, okay? What if you could apply them to a current strategy you have? Even if it was just that simple 50-period moving average technique I shared with you. Do you think that could have helped your trading this past year? In fact, go back and look at your last 10, 20 trades. I can almost guarantee that the reason why you had losers was because you were either buying below the 50-period moving average or selling above the 50-period, okay? Now, what if I could give you 3, 4, maybe 5 more techniques such as today, but entirely different? Well, here's what we're offering today as our attendee discount special. We're offering you our Secrets of a Stock Exchange Specialist training sessions. What this is a 3-hour video seminar that was recorded. I spoke in Denver years ago, and they recorded the entire 3-hour conference that I was the featured speaker. And so what this is 3 hours of me speaking about more high probability trading edges similar to what I taught you today, all right? I go into detail about which indicators to use, but most specifically which ones not to use. I tell the difference between a system versus a strategy. I also speak about the #1 chart pattern that you should be looking for regardless of what strategy you trade, okay? But I think the most important thing about this 3-hour video seminar is that I give you the complete rules to the strategy I just shared with you. Now, if you notice, I only went over the entry portion of the strategy in strategy #1. We did not talk about exits. I didn't talk about stop placement. I didn't talk about money management. We did not talk about advance entries. We did not talk about trailing your stops, okay? All this is included in our 3 hours of trading strategies and techniques in this Secrets of a Stock Exchange Specialist. In fact, here are some recent signals that were generated by strategy #1. On the 5th of April, which is just about a month ago, CVX met all the rules here. We're above the 50, came down and touched the middle line, had a valid setup bar, but we never traded above. Now this is our valid setup bar on the 5th, and you would have gone long. And as you can see here, in just about 2 or 3 weeks, that was a 10-point profit to the upside. Okay, that was just last month. Now, just last week in PRGO, we see here that we had a valid signal to go short. Why? Because we're below the 50-period moving average. The Donchians are headed lower. All right, so you're waiting for price to rally and touch the median line, which it did here, it did here. But on the 20th of April, just a little over a week ago, this was the valid setup bar because it traded below the next day. And guess what? The stock dropped 30 points in the next week. Now, obviously, some news came out. Obviously, something made it go down that strong, that quickly. But what have I been saying this entire presentation? There's no reason to concern yourself with news. There's no reason to concern yourself with outside sources telling you what to do. Why? Because most of the time, everything you need to know is in the chart in front of you. It's giving you all the information. It's the source to every setup you need. The only trouble is that most of us are taught not to listen to the market. We're taught to listen to someone or something else. It wasn't until my mentors said, Steve, you've got to grasp that everything you need to know is in front of you. Just listen to the market and you'll become a more consistent trader, is when I started to become more consistent. So as you can see here, something obviously caused this stock to go down. But no one called us up 2 days before and told us to go short. We saw it by simply applying strategy #1. Now here's a chart of a 10-minute chart of the E-mini. And by the way, this was just yesterday. If we look here on the very bottom, this was on the first day of May here. I believe this was on May 2nd. Okay, so that was actually yesterday, Monday. On a 10-minute time frame, we're above the 50 period. The Donchians are all rising. All right, so we simply wait for price to come back down and touch. So here was our valid setup bar. We went long on the next 10-minute time frame, and if you would have held it to the end of the day, that's 12 points in your favor, or $600 per contract. And then lastly, oops, went the wrong way. We can look at a weekly chart of the euro yen. Okay, this was in February, coming into this last week. We had a really nice sell signal on a weekly time frame. We're below the 50-period moving average. The Donchians are headed lower, and we bounced up, touched the middle line, and here's our setup on the 5th. We went short the next week, and coming into this week, that's 800 pips to the downside. That's roughly $8,000 per currency pair contract. So all the rules in their entirety, not just the entry, which I shared with you today, but all the rules are presented in this 3-hour video seminar. Now, the good news about this is that this is a live link that's sent to you. So in other words, you don't have to worry for a disk to be sent to you or something that has to be shipped. This is just a link that is sent to you, jam-packed with all this information. Another added advantage of this is that once you become a student of mine, regardless of what you purchase, regardless of what technique or strategy, you are a student of mine for life. So as you see here in the bottom bullet point, you will have lifetime correspondence with me. You can contact me through email whenever you'd like, through my personal email address. You can contact me, and I will get back to you as soon as possible, answering any question that you may have. So you see that this is jam-packed with information, that's knowledge, things that I still use today, things that have sustained my trading for nearly 40 years. We're giving this to you, 3 hours of trading techniques, plus all the complete rules to our most consistent pullback strategy, strategy #1. Now, my sister site, which is Pro Trader Strategies, They have this course marketed and promoted on their website for close to $1,000. But because of your attendance today, coming to this presentation, we've drastically discounted it to $37. You're going to get all this information, all the rules to the strategy, along with tons of more information on how to trade the markets, the things I've accumulated in nearly 40 years for only $37. I can almost honestly say that most of you have most likely spent more than that trading today, just in commission costs alone, most likely. So here's how to take advantage of this special discount, because this is only going to last for the next couple of days, I believe for 48 hours, and then the price will go back to $997. Contact Pro Trader Strategies. They market and promote all of my courses. You can email them at the email address here provided. You can call them directly, as you see the phone number, or you can go to this link right here at the very bottom of the page. Now, unfortunately, this link is not live, so you have to copy and paste that onto your browser, but you can do that really simply, and in a few moments, I believe Pro Trader Strategies will post in the chat box a live link, so you can copy that and simply click that on, and it will be taking you live to the sign-up area. But if you aren't able to do that, you can easily just contact Pro Trader Strategies, call them, email them, or just copy and paste the link at the very bottom, and it will take you to that $37 sign-up deal. But remember, you must take advantage of this in the next couple of days, or else it will go back to the full price. Now, I'm going to leave this information up here so that you can all check it out at your own leisure and hopefully become students of mine in the next couple of days. But let me open up the question and answer box and answer your questions as best as possible. John says, I can't find Daunting channels in Thinkorswim. John, just contact your tech support. If they aren't able to give them and apply them for you, there is a website which all of you may want to copy down. It's called freestockcharts.com. It's, as the title says, entirely free. There is nothing you have to do to pay, and you just simply create a username and password, and you will be able to use them on any chart you like, and it comes with all the Daunting channels, okay? Next question. Lingham asks, very good, where do you place the stop loss? Remember, that is in the course, so that's what comes with the $37. And trust me, for $37, we're giving you a ton of information. We're not going to just give you the different stop placement. We're also telling you how to track the trade to stay in long. We're also giving you different exit points. You can exit at the standard exit. You can stay in the trade and try and squeeze as much profit as possible. So this comes for $37. So for $37, we give you the stop placement, the exit points, the money management. So I think it's a great deal. Robert is asking, is it the 50-period simple moving average or the EMA, the exponential? It's the simple moving average, okay? Now, trust me, this is not something that's mystical that can only work with a 50-period simple moving average, but in my nearly 40 years, the 50-period simple moving average works the best, and I would use that one more than anything else. But remember, the concept is more important than anything else. The concept is simply, if price is above, you only want to be a buyer. It does not mean you're going to buy at the market on the first close above the 50 period or sell at the market on the first close below. It simply means that that's telling you what side you should be on and what you should be looking for, either buy setups or sell setups, either one of your strategies or one of mine. It does not matter, okay? But if you use that simple technique, I really feel honestly you will cut your losses in half, okay? I missed the beginning of this. Will it be recorded? Yes, it is. You can simply contact Pro Trader Strategies. If you look in the chat box on the far right column, you'll see there's a phone number there or an email. You can address them, and they will simply send you the link to this. How do I get the Daunting channels? Remember, once again, I'm going to say this again for anyone who came in late or who didn't hear what I said. Get a pencil and paper. Write this down. This is where you can get free Daunting channels. It is at a website, www.freestockcharts.com. They provide it there for you, and all you have to do is simply, create an account. It's a great website. Everything's free, and you can be up and running with Daunting channels right away. Okay. James says, should you confirm with more than one time frame? Good question, James. In my nearly 40 years of trading, I say this to everyone because this is probably one of the most popular questions I'm asked by my beginning students. In my nearly 40 years of trading, I have found no consistency in using more than one time frame. In other words, I learned that technique just the way everyone else did. And I said, okay, when the higher time frame is in sync with the lower and vice versa, then I can take the trade. Well, all I found after trying to apply that technique was that I missed a lot of good trades by waiting for those two to match up. So I have found no consistency. I just trade the chart I'm looking at. So therefore, if a signal is generated on a 5-minute chart, that's the only time frame I'm looking at. If I get a sell signal on a daily chart, that's the only time frame I'm looking at. Remember, I said in the very beginning, don't overcomplicate your trading. And I personally have found no consistency in that method. It's pretty much just like the emperor's new clothes. Everyone says you're supposed to use it, but there's no validity in it. In the end, if you really feel that you must use it, I'm not going to tell you not to, but it is in no way recommended or suggested in any of our teaching at Specialist Trading, okay? As you noticed, if you look in the chat box on the far right, they have now posted the live link to that page. So all you have to do is simply click that on and it will automatically take you to the $37 discounted page, and you can be up and running in just a matter of moments, okay? Remember, it's nothing that has to be shipped to you, nothing has to be sent to you. There's no discs involved. It's simply a link to a recording, and you can have this and you can study at your own leisure. You can study on your work break, during your lunch break, during the weekends, and it's always yours. It's not something that expires after 2 weeks. It's yours for life, okay? Let's see. Yeah, the Donchian channels are in free. I don't know if they're in stockcharts.com, but they're in freestockcharts.com. Can you win a trading competition using this strategy? First of all, if anyone asks if you can win a trading competition, with a strategy, I would run for the hills, because strategies don't win anything. It's the person trading who wins. We have people who trade strategies, okay? And everyone has different results because, as I stated in the opening statements, you should never take your cue and trade the way someone else does. And never try to mimic someone, and never try to mimic a strategy and say, is it going to get me here or there? Your strategy or your trading is only as good as you are, because everyone comes with different risk, reward advantages or insights. Everyone comes with different type of personality traits. Some people like to trade conservatively. Others trade very aggressively. There's no way to say anyone's going to win a trading competition. That would be silly. The only thing we're trying to do is we're trying to get away from that. We're trying to say all we want to do is instill some sense of consistency in your trading. And that's it. Because trading championships will not sustain you. All right? $1 million strategies will not sustain you. I've been trading long enough to know that people have traded those things have lost everything. Not everyone, but I've seen a lot of people that have. The only thing that will sustain you are sound techniques that have shown consistency. And that really is the true meaning of success. Not making $1 million 1 year and then giving it all back the next. All right? There's tons of traders who have done that. What's the good in that? The traders who are worth their mettle are the ones who are able to trade consistently year after year, so that you can ultimately trade not only just 1 or 2 years profitably, but 5, 10, 20, 30, 50 years down the road. That's the true meaning of success. So that's what we're trying to instill. We make no suggestions or recommendations or claims that anyone will win any competition. In fact, I wouldn't even want anyone to do that, because that's not what success is about. Okay. Let's see. A few more questions here before we have to sign off. How is this different from the MACD? Well, I don't use the MACD, but I think the MACD is mainly used as an overbought, oversold type of indicator or oscillator. This is not trying to any way tell you that the markets are overbought or oversold, or we're just trying to find a trending market with the 50-period moving average. We're trying to find a place to enter with the Donchian channels, okay? That's really about it, okay? Is the stock chart free or pre-stock chart? It's not, well, Jerry, it's free stock charts. Yes, I think you're looking at pre-stock charts. It's free as in free of charge. So FREE stockcharts.com, okay? Trying to look here to see if there are any more valid questions. Yeah, most people are asking about the EMA or the SMA. Remember, that's really not what matters. What matters is that you're on the right side of the market, okay? What matters is that you're on the right side of the market. In closing, I think, if you look back, most people that lose money trading the markets are once again relying on an outside source. This can either be an indicator, this can be a person, this can be a chat room telling them what to do, okay? Our job at Specialist Trading is just to provide you with information. I've been trading for 40 years using the same information, okay? I left the floor to trade because I didn't have to be on the floor anymore to do it. So this is what I do, and the point is we're trying to tell you, not everyone is going to come up with the same results. You're only as good as you put in. But if you're concerned whether people are making money, whether you're making enough money, whether you're winning championships, you're going around about it at the wrong way, in our opinion. You should only be concerned in being in sync with the market, because the market is telling you everything it wants to do. Don't be concerned with other traders, whether they're making money or whether they're losing money. That's silly. Who cares? The only thing you should be concerned is are you in sync with the market? The trouble is most traders aren't. So we give you the tools and the information to be in sync with the market. We mentor you along the way, and that's all that matters, okay? If you're not sure, if you don't believe us, do a Google search on myself or Pro Trader Strategies and of Specialist Trading. You can go to our website, see all of the testimonials that we get on a daily basis of people that have taken our courses and that have finally gotten onto that road to consistency, okay? So this is all we're trying to give you. And you can see in good faith that we gave you information that you can start using as early as today. So even if you come to this webinar that didn't cost anything, just maybe 45 minutes of your time, and you said, you know what, Steve, it's not my cup of tea. I don't want to spend $37. Well, guess what? You still got a great entry technique and some great information for free. So that shows you what our motivation is. It shows you that we really just want to educate you. We're not trying to, give you any $1,000 deal. You only can learn this if you spend thousands of dollars. No, we're sharing something with you for free. And if you want to get the full information, guess what? $37. I mean, we're really not asking the world for that. So it's up to you. You can see the validity in our presentation that we're really trying to help you. And this shows our character, all right? So if there's any question about our character or about what we want to do, you can see it on our webinars. We always leave people with something they can use tomorrow, even if they do not decide to become students of mine. You can always use something. So it's a great bargain, but at the same time, more importantly than that, it's great information that hopefully will be able to turn your trading around, the same way it turned my trading around. So in conclusion, here is the information you need. Once again, contact Pro Trader Strategies. Remember, that deal is only going to last for a couple of days. Then the price goes back to nearly $1,000. In the chat box on the far right of the GoToWebinar column, you'll see the live link posted there. So you can simply click that on and take advantage of the $37 deal. You're not obligated to purchase anything else, just the $37 deal. And if you'd like more information, please contact the good people at Pro Trader Strategies. They can give you much more information on other strategies or other courses that we have, okay? In conclusion, I want to thank you so much for taking time out of your day to join us. I hope you got something out of this. I hope you can really use this to your advantage. But more importantly, I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I will see you next time. Bye-bye.